In this video, I will tell you about the changes in consumer lending rules made by State Bank of Pakistan, SBP. With changes in regulatory frameworks and a reduction in the financing limit and duration, the State Bank of Pakistan, SBP, has been pushed to slow down import growth and lower the financing limit and term, notably for imported cars, due to growing trade and current account deficits. On Thursday, the central bank updated consumer finance regulatory standards. The SBP stated, this targeted move would assist limit demand growth in the economy, resulting in slower import growth and thereby maintaining the balance of payments. Due to very high import growth, which was previously considered vital for economic growth, the country is facing a major balance of payments crisis, with a ballooning trade deficit. The current account deficit increased to $1.5 billion in August, exceeding the SBP's forecast of 2 to 3% of GDP for fiscal year 2022 by a large margin. The present trajectory indicates that the country will face a considerably larger deficit. The SBP stated, the changes in prudential regulations effectively prohibit financing for imported vehicles and tighten regulatory requirements for financing of domestically manufactured or assembled vehicles with engines larger than 1,000 cc and other consumer finance facilities such as personal loans and credit cards. The maximum term of vehicle financing has been decreased from 7 to 5 years as a result of recent modifications. The automobile business is thriving, despite the fact that demand remains strong. The maximum debt burden ratio allowed to a borrower has been reduced from 50 to 40%, according to the new regulations. It goes on to say that a single person's total vehicle finance limitations from all banks and DFIs, development financial institutions, would never exceed 3 million Pakistani rupees at any time, and that the minimum down payment for auto financing has been raised from 15% to 30%. All of these efforts have been taken to slow down the importation of automobiles and make it easier to finance them. It will try to limit the purchase of foreign and domestic luxury vehicles, said Samiel Tariq, Pak Kuwait Investment Company's head of research. He claims that automobile demand is strong and that receiving a car, after purchasing one from a firm, might take up to 6 months. One of the causes for increasing demand was easy access to finance, which was limited by restricting the amount of funding and the duration of credit. Analysts also pointed out that the latest interest rate hike should be seen in the same light. The more expensive money will reduce consumer borrowing. The State Bank of Pakistan raised its interest rate by 25 basis points to 7.25%. Analysts predict that the impact of the changes to prudential laws will be seen in a few months, but that economic activity will not be slowed. In fiscal year 2021, road motor vehicle imports totaled $2.142 billion, up from $1.276 billion the previous year, indicating a significant increase in imports. The import of the same was $495 million in July-August fiscal year 2022, compared to $160 million in the same time previous year. Thanks for watching. If you liked the video, please hit the like button. If you want to see more videos, hit the subscribe button. And if you have something to say, please leave a comment.